is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Friday morning, 9 a.m. Eastern Time. We got 30 minutes to go until the opening bell, and we got markets starting in a little bit of negative territory, all things considered right up there near all-time highs. How about those S&P futures last night? We got a 4,100 print in the S&Ps right now. That high coming at about 10:30 p.m. Eastern Time last night. From there, we're off about 20 points. You really see the slide begin at about 7 a.m. Eastern Time this morning, with the S&Ps up just about 4,100. Right now, we're trading at 4,081. We get the tech stocks pulling back a little bit as well. Right up there near the all-time highs. All-time highs 13,900 on the NASDAQ 100. Quite the acceleration from where we were at 10:30. We're down 95 points on the overnight session right now in the NASDAQ 100. That's about 0.7% in the negative. But when you look from where we were overnight, you're talking about approaching 200 points off of the highs we had last night at about 9 p.m. Eastern Time. We get the Dow positive by about 27 points right now. 33,414 of the Russell, giving up some of the gains we had as well. Russell negative by 7 points, trading at 22.31. Oil's down about 17 cents at 59.43. Gold giving it back. Gold had quite a run. You back this up even on a 10-day, 30-minute. We were at a low of 16.77. You back things up to last week. We rise to 17.59. We're trading at 17.32 with gold pulling back. We got silver right now down about 55 cents right now. Silver trading at 25.04. Just 1 second, I apologize. And with that, we'll jump to what else we have. Notes and bonds right now. We got the 10-year sliding down. We got the 10-year negative 17 ticks, 131.15. We got the 30-year right now negative by 23 ticks. We get the 10-year yield sitting at 1.68%. Talk about some volatility, though. Just from Monday, we go from 130.25. We rise above 132 last night, currently trading at 131.15 in the 10-year. And we got to jump to the VIX. How about the story yesterday of the VIX? Somebody taking out a nice call spread between about 25 and 40. Quite a far cry we got to go. We got a VIX. We got a 1620 print early this morning on the VIX, currently trading at 1733. S&Ps right now negative by 6 points right now, trading at 4,083. And what else we got going on? Jumping around, PPI data. Pretty interesting. This usually comes out at 8:30 in the morning. PPI this morning, they had a problem. The Bureau of Labor and Statistics was down between about 8:30 and 9. That number coming out with a rise of about 1% in March. The expected was about 0.5%. Quite the number. We'll see how that hits the markets this morning. We got the S&Ps, a little bit negative action coming into the opening bell. We got NASDAQ down 90 points, Dow up by about 33. And how about Bitcoin? Got to check it out. Bitcoin right near 59,000, 58,970 for the price of Bitcoin. What else we got going on? Jumping around to some of the stories we have this morning. Where do we start? How about Boeing? Boeing production issue prompts Southwest to pull some 737 MAX jets from the schedule. Not the news that Boeing wants to hear, no matter what it is, right? If you hear that the 737 MAX is getting pulled out of rotation for any reason, Boeing down a bit this morning from 255 to about 250 in the pre-market on that news. What else we got going on? The stocks making moves this morning. We had some earnings with Levi Jeans. Quarterly profit of 34 cents a share for Levi, 9 cents above estimates, revenue above estimates as well. How about 41% rise in digital sales? It's tough when you think about clothing. One of the toughest things to buy online because it's, everybody's got their own fit. You want to be able to try things on. Nonetheless, Levi's, they're getting it done during the pandemic, 40% rise in digital sales. Here's the only thing I'll disclaimer, folks. Anytime you hear a percentage number used to talk about growth, the important thing is that what are they growing from? Because I would guess that Levi's numbers that they're comparing it against with a 41% rise in digital sales, percentages off of very small numbers can be very deceiving. As in if they did $10,000 versus worth of online sales last year, Well, geez, that just means that they're doing $14,000 of digital sales this year, right? Not a big deal at all. If they were doing $100 million in digital sales last year, now they're doing $140 million, maybe a different story. Continuing on the earnings front, WD-40. Let's see, 8 cents a share below estimates, quarterly earnings of $1.24. We'll jump to both of these charts in a moment. Revenue below analyst projections. The company said supply chain issues hurt its ability to meet customers' demands. Supply chain. We're seeing it all over the place. WDFC is their symbol. There's a drop-off from about 310 to 288. You put this thing on a daily, it's been quite a run. We've been consolidating since their last earnings in January, and this morning we look to open at about 285. Look for that 274 area to be tested. That's the low we had after their last earnings events. And if you fill the whole gap, you're talking about a low of 271. Not outlandish when we're trading at 285 right now for WD-40. And we'll jump to Levi's. That's not it. There it is, LEVI. We're trading higher this morning. We're going to be above the highs that we had back in early March. Right now, you got Levi trading at 26.50. You see the chart. We'll zoom it in on the action this morning. Spikes higher on their earnings, a little bit of volatility, and we're going to open higher on Levi. You put this thing on a max, how about making it all the way back to where we were in April of 2019? The high there, you're talking about a high of 24.50. We just eclipsed it last month in March, and we're going to open above that level right now on Levi. All right, what else we got going on? We talked about Boeing. Streaming, Fubo TV, they won streaming rights for the Qatar World Cup 2022 qualifying matches involving 10 teams in South America football. Live sports, it's the next big front in streaming. You saw the deal the NFL just passed. How about $100 billion plus for their rights for about 10 years? The brilliant thing about the NFL is that they divvied it out to basically everybody, right? Amazon got a piece of it. CBS got a piece of it. NBC got a piece of it. Disney got a piece of it. Nothing like it on the NFL. What else we got going on? Checking out some of the stories. Yeah, Amazon. This is a big one. It's interesting to see how this happens. So Amazon workers in Alabama warehouse, they appear on the way to rejecting unionization. About half of the approximately 3,200 ballots counted so far, and it looks to be about a 2-to-1 margin against unionizing. There's some reports out there that 500 ballots have already been challenged. Not sure that that will play into things, though, as that looks to be a defeat for unionization on Amazon with their first vote out there. Southwest. How about the airlines? Southwest, they're bringing back flight attendants in a big way. Look at this monthly, right? Let's just put it on a daily for some context. So they're recalling 2,700 flight attendants from leave of absence, anticipation of a rebound in summer travel demand. I would bet so. That follows a recall of more than 200 pilots by the airline this week. So just in the last week, right, you got 200 pilots, you got 2,700 flight attendants as they seem to be ready to march on through the summer. Now, we put this thing on a 3-year weekly. Remarkable when you think about prior to COVID, you were sitting at about 55 to 60. This morning, we're going to be sitting between 60 and 65. Actually, a better environment right now for those shareholders than you were just a year ago. JetBlue, domestically taking a look at, JetBlue's at about 21, right where we were prior to COVID, versus some of the airlines international have a little bit of ways to go. Delta, one of the strongest up there, sitting at 50. They were at 60 pre-COVID. You have American Airlines right now sitting at 23. They were sitting at about 30. What else? We'll wrap it up with United. United Airlines, 59.43. Jumping to the cruise lines. Carnival, 28.56. They got to make it all the way back up to 50. Excuse me. In Florida, we got Carnival, of course. The governor, he's going to be suing the CDC, I believe it is, trying to get the shipping, the cruise lines back open. It's a tough deal, folks. These COVID cases, they're still raging, but understandably, this industry, very important, especially to a state like Florida. Stay tuned, folks. Be right back after the break.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps down about 4 points right now as we wait for the opening bell. 12 minutes to go until that opening bell. You see a little bit of a pop we got from 4,082, but we got a little negative action right now in the markets. All of them basically sitting right near all-time highs. We got the Dow positive, the only index in the positive by about 49 points right now, 33,439. What else we got going on? So jumping back to the PPI. Data out this morning. So again, interesting. It's supposed to be out at 8:30. The world didn't have it until it looks to be about 5 till 9. That number comes out. And we got a rise, folks. We have a rise. The PPI, the Producer Price Index for final demand, jumped 1% last month after increasing 0.5% in February. The Labor Department said in the 12 months through March, the PPI surged 4.2%. That was the biggest year-on-year rise since September of 2011. Followed a 2.8% advance in February. Now, here's economists were only looking for 0.5% in March and 3.8% year over year. So we got a full percent in March, and we got 4.2% year over year. And as it mentions, the report was delayed after the Bureau of Labor Statistics website had crashed, but that's pointing to some inflation, folks. The largest annual gain in almost 10 years, fitting in with expectations for higher inflation as the economy reopens amid improved public health environment and massive government funding. Can't put that too lightly in a big way, but interesting to see how that shapes the trading day. We jump over to notes and bonds. Now that number coming out right prior to 9 a.m. and you see maybe that was the data right there. No real huge reaction though when you talk about notes and bonds. The trend was already basically existing, as in here's your 5-minute chart. We were up at about a high of 132.03 right towards the end of the day. Look at that. It's like basically 4:15 p.m. Eastern time last night, and we trade down a whole half a point in the 10-year to 131.16 as we get a little bit of rising yield coming in to Friday action. All right, what else we got going on? Jumping around to some of the stories. GM and Ford, the continuing saga of chip shortages. Really interesting to see who this is going to hurt the most as it plays out. GM and Ford are temporarily idling or extending downtimes at several plants in North America due to an ongoing semiconductor chip shortage impacting the global automotive industry. The temporary plant closures range from a week or two to several additional weeks for plants that have already been idled due to the parts shortage. The company expects the problem will reduce its operating profit by up to $2 billion this year. Not joking around, folks. $2 billion. Now, they've already come out and said that, I believe, in one of their previous earnings or releases that they had. Checking out forward on the 3-year. You dive from about $9 to under $4. We're sitting at $12.51 right now. No real huge reaction on that. They had already come out and said it might impact on that to that degree. GM from 35 down to 15. We're sitting at 60. Remarkable how some of these car companies have come out of COVID. When you think about where we were prior to COVID, where you were at the depths of the lows of March, and currently where we're sitting at, GM, you're going to open slightly lower with the market this morning at about 59.75. Let's jump to Boeing shares, see how they're trading. Boeing right now trading a little bit lower again. Wanted to check in with them. Continuing to slide. We're at about 250. The lows of yesterday, 249.31 for Boeing shares. Let's jump around to some of the FANG stocks on Friday. Quite a couple of weeks for these equities. You got Amazon. On the heels of, it looks like the unionization vote will not win, that they will not unionize in that plant, seems to be the indication. Amazon, again, slightly down with the market. Now, remarkable when you look at Amazon, right? We were just below $3,000 as recently as a month ago. You're sitting at about $3,300. Looks to be about $3,400. The high of $3,552. That's the area that you may start bumping into. A little bit of resistance since we've eclipsed that level all the way back in July. The first time we made that run, folks, the high was $3,344. Look for that area to be an area you test. We have a high on the gap there from October. You're talking about the gap beginning there at $33.39. So look how those match up, right? We have the gap that closes there. You're talking about $33.39.50, and the high point here, $33.44. So you're talking about a $5 range, but look for $33.40 to be the next area of resistance. And you see, folks, you don't have to be a brilliant technician in the market to see where areas of support and resistance build. We just chose $33.40, which was the first flash high it had before it really sold off. You also had a gap here from that area in October. We bump right up against that area in November. The high there, $33.66. When you're talking about a $3,300 stock, folks, $20, $25 here or there, it's a range. It's not a science. We again get back up to $33.50. We slightly eclipse over that level back in February before we pulled back harshly on February 3rd. And again, we were climbing right there to $33.33. So bumping right up against some areas of resistance on Amazon. We'll see how they react today with the NASDAQ 100 down about 70 points so far. Jumping around to some of the other tech stocks. Apple shares slightly negative this morning at 129.51. We closed yesterday at 130.36. See how Apple reacts. Some of the other stocks in the FANG sector, Microsoft shares, down a bit today, but quite the surge yesterday to 254.14. Remarkable when you think about just on January 19th, we had Microsoft trading at 212. We're up $40. You're up 20% in Microsoft over basically less than 3 months. Remarkable action in that tech sector. Let's take a look at Tesla. Tesla shares down a little bit this morning at 678.26. And we'll wrap it up with Google, been one of the strongest out there. Google, slightly negative as well with the NASDAQ 100. But, man, you look at where we were in that same comparison to Microsoft, right? Google, how about adding $500 since we were? Google's up about 30% from where we were on January 15th. Remarkable action in a big way. We get the S&Ps catching a little bit of a bid. Look at this chart, folks. Remarkable acceleration to the uptrend channel. We're sitting basically at all-time highs. The S&P's minus 2 points technically on the session, but you're seeing a little bit of a bounce. We were just down at a low as I started the program of 4,081. We're up about 6 points right now from the lows of 4,087. Jumping to Bitcoin, as I mentioned, hovering right at around 59,000. We got crude at 59.55, and gold, quite a little pullback, catching a bounce with the markets, putting gold on the daily. I've talked about it many times. That $1,700 mark, a critical area for gold to hold. It's held it a couple times. You back it up to the area we had a consolidation going from April basically to the middle of June, and gold right now, though, pulling back about $21. I mean, all things considered, folks, we were just sitting at a price level. I'm going to put this on a 10-day chart. We were sitting at a price level of 1677. For some context here, you make a full run up from 1677 to 1759. The low that we just made was a price point of, where are we? Come on. 1730, and a 382 retracement would be 1727 of that run we had just from about 9 days ago, last Wednesday, of 1677. When you get these types of moves, folks, You're talking about an $83 move in the span of about 6 or 7 trading days. Of course, you better anticipate you can get a pullback, folks. Gold just doesn't trade up hundreds and hundreds of dollars without pullbacks. We just made a nice $83 move from basically the lows of last Tuesday/Wednesday to the highs we had yesterday. Gold pulling back into a Friday, though. We'll see what happens with gold trading at $17.37 right now, waiting for that opening bell. Silver, see where we are on that Fibonacci retracement level. Silver makes quite a run. You're talking about a $2 move almost in silver from $23.74 up to $25.67. The 382 just under $25. We almost made it there this morning. We make a low in silver of about $25.01. That 382 retracement, you're looking at about $24.93. All right, folks, stay tuned. We got 3.5 minutes until the opening bell. We'll be back in 3 minutes for the opening bell for Friday. We'll check around to some of the other equities we have moving with Friday. Stay tuned, folks. Give us a call, 877-927-6648. Be right back, folks.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. It's Friday morning. It's 9:30 in the morning. We got markets open, and we got the S&Ps negative by 1 point right now, trading at 4,087. We got the NASDAQ 100 negative by about 49. The Dow positive, only index in the positive right now, positive by 58 points. The Russell negative by just 2 points at 2236. Jumping over to the VIX this morning. VIX catching a little bit of a bid right now at 1727, all things considered. I mean, we closed yesterday at about 17 in the VIX. We had some 16 action pre-market, 1727. All the rage yesterday was about that big VIX trade taking place. Basically, what you had is you had a call spread going on in the VIX. I'm going to pull it up real quick just for a demonstration, folks. Thinkorswim, TD Ameritrade, they are a sponsor, folks, but I encourage you, if you haven't tried them out, head on over the front page of TFNN, click on the Thinkorswim banner, open a demo account. You can be in here practicing. Of course, we get Fast Market every trading day at 11 a.m. Eastern Time by Kevin Hinks, Alex Coffey, and the team at TD Ameritrade Network. But I believe they were going out to July. And what they were doing was they were looking for the VIX to close at least above 25. They were looking for it to trade no higher than 40. So what they're doing out there is they were buying a VIX 25 call. Okay, so we get the calls on the left, we get the puts on the right. All right, now you can do this yourself, folks. You don't have to do it with 200,000 contracts, which is what got traded yesterday, which is why you got so many headlines. But here you have the VIX. All right, we got a 330 bid by a 350 ask. So you can get into a 25 call on the bid for $3.50. That means your break even becomes $28.50, right? Let's just line this up. All right. Now, I love the Thinkorswim platform because of how they do things visually with the risk profile. So these are simulated trades. All right. You can be in the trade sector or you can just be in the analyze tab. Okay, now we're in the Analyze tab. You're talking about simulated trades right now, so we're going to get to simulate what we're doing before we're lining up actual trades, and this is in a real account. This isn't in the demo account, but you can do the same exact thing in a demo account. But I'm just telling you, when you get into even a real account, right, sometimes you just want to play around with hypothetical trades. You can do that in the Analyze tab. So we're adding simulated trades right now. So we're buying a 25 call at 350. It expires July 21st. Okay, you pull up the risk profile. Now things... when they're made visually, folks, this is what I love. It's nice and easy, all right? I want you to focus on the blue line. The blue line is the value at expiration of July 21st. I'm going to back this down just on one contract, which represents 100 shares for ease. So we buy it at $3.50. That's going to cost us $350 for the right to purchase the VIX at 25 through July 21st. As of July 21st, we need the VIX to be at 28.50 to make up the $3.50 that we paid for it. We needed to be $3.50 above our strike price, so we got $28.50. Now, here's what they did, though, is that they offset some of their costs by creating a call spread by then selling the 40 call. So what they're doing is here, and what you could do is, they're paying the premium in between two price points. Okay, so they are paying the premium that this market has allocated in between 25 and 40. Okay, so they bought the 25 call, and they're going to sell the 40 call. All right, now in the Thinkorswim platform, folks, if you hold down the control key, you see when I hold down control, right, these hotkeys pop up. That's how you build multi-leg option trades. You hold down control, all right, and then you hit, let's say we're going to sell this time. So if we're selling on the bid. Okay, so you sell, you hit the bid, I'll click it, there we go. All right, now I have to set the contract size the same. It's going to be a vertical. There we go. So we're buying a 25 call. We're selling a 40 call. Now look how that changes what we're doing, right? In terms of instead of putting up $3.50, right? We're now only putting up $2.05. Look how it changes the risk profile. We're now talking about a break even of 27. Now the important part here, though, is that instead of this line just continuing to increase as you have unlimited profit potential, if you just have a call, we've now capped our profits at $40 because that's where we're selling somebody else the right to take that product from us at 40 for that privilege. What we're doing is we're absorbing about $1.35 in premium. So we're paying $3.50, we're absorbing $2.35. The $2.05 comes from the bid-ask spread. They put it right in the middle. So we got a 5-cent bid-ask spread here. We got about a 10-cent bid-ask spread here. They're looking at the middle of the market for the two different option legs trades to represent that vertical spread. Okay, now this is a debit call spread, folks. We are going to debit, which means we're paying about $2 per contract pair. So that's going to represent a risk of about $200. Our max loss is $205 if we enter this trade. Our max profit is the $15 range we've created minus our original debit. So we're looking at a max profit of about $1,300. For the purposes of the demonstration, folks, let's just pretend we can get into this thing at $2. It makes it simple math. We put up $200. we can get $1,500 of total gross revenue, you could call it, proceeds, you could call it, and then we have to subtract the two. Quite a trade. I mean, 40 is quite a price tag for the VIX with everything going on, folks, but we've been there countless times. Every time we've been down here, we were there in terms of June. We got back to $20 in August. We were almost back up there in September, got back to 25 in October, got back above 40 in October 30th, got back to 1951. We hit almost 40 again in January. We got above 30 in March. So you're seeing traders, they're looking at a VIX that's lower than it's been in the last 14 months, and they're saying this might be the time to pay for some volatility, looking for a second spike, looking for like the 6th, 7th, 8th spike in the VIX. We got a lot of volatility, folks, that may be coming our way in terms of the expectations that we're going to have when we start getting non-farm payrolls for the months of April's going to be a month, but we still got COVID spreading pretty dramatically right now. You can't expect the economy to open back up in any grand fashion when cases are still spreading pretty dramatically, especially in some cases, right? Michigan making headlines as they have quite a spike going on out there. They're looking to possibly exceed their December spike. Not a lot of people would think that we could have states that are going to have their worst outbreak yet in the middle of April of 2021, but that's what's happening. Now, I say that because the expectations for things to open up, they aren't right now, folks. Okay, the market is very forward-looking. The expectations 2 months, 3 months down the road, if we don't have some huge non-farm payroll numbers and the Fed is just expected to support this economy when we're 8 to 10 million jobs under where we were prior to COVID, you might see valuations pair a little bit. And that's probably what that trader was thinking about, 200,000 contracts. My goodness, right? Let's just see if I can. Do I even have the ability to put how high can I go on? Let's see what 1,000 contracts looks like for price. Yeah, is that right? What number is that? Yeah, that's $200,000 for 1,000 contracts. Yeah, I'm losing myself in zeros here, folks. But yeah, that's a $20 million trade for 100,000 contracts. That means that's a $40 million trade. Let's just do it. Let's do the exact trade. There's 200,000 contracts. You're putting up $40 million. And if you're right, you make $260. Sign me up. Except for the fact that if it doesn't work out, don't sign me up because that's a $40 million hit. But you see why that made some headlines, folks. That is quite a wager in a big way, but that's quite a call spread, and we'll see what happens. But it's not surprising when you see a 16 handle on the VIX with everything else going on. 16 is the historical average in the VIX. I would say we might have a little bit more volatility than historically average in the market right now with everything going on. That's one man's take. We'll see how it plays out. But guess what, folks? Just like that, we get the S&Ps back in positive territory. All sanity is restored. I kid. S&P is positive by 1. Tech stocks pulling back a bit. Dow charging higher. Look at that pop. Dow up 123 points. Stay tuned, folks. Be right back after the break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. The S&P is up by about 2 points right now, trading at 4,091. We got the tech stocks negative by a bit, 73 points. If you head on over to the front page of TFNN, folks, every trading day after my program, 10 a.m. Eastern Time, Mr. Basil Chapman with the Tiger Technicians Hour, and Basil's got a great webinar coming up next Thursday, folks, dressing up the charts in the Chapman wave. So what Basil's going to be doing is he's going to be doing just a ton of charting. Okay, so he's got a number of archive webinars that you already gain access to, folks, as part of the opening call. All right, he's got an entire section of archive webinars that all subscribers gain access to the instant they sign up. So you can go over some of the methodology to Basil's charting techniques within the Chapman Wave. What's so cool about this is he's just going to literally go over chart after chart after chart, showing you the practical application of how to comprehend, how to notate charts using his Chapman Wave methodology. So what's going to happen is he's going to be talking about specific equities. If you have equities that he wants to take a look at, you want him to chart out for you, you can either send that in ahead of time to basilchapman@tfnn.com. If you're a subscriber, you can attend the webinar live. It's going to be a 90-minute webinar taking place Thursday. Tax day, not tax day this year because it got moved back, right? Thursday, April 15th, next Thursday, 90 minutes from 4 till 5:30. It's going to be a great webinar, folks. He's going to be in there, and he's just going to be drawing charts the whole time. That's what he's going to be doing. He's going to be giving you his take on the charting techniques. He's going to be drawing his A, B, C, D formations, and then he's going to be taking the notation off of it and showing you again. Because so often, folks, charting, there's a lot of nuance. There's a lot of art to this. There's a lot of interpretation to this. And sometimes it's so difficult when you go over a methodology with a trader and then you go to apply that methodology yourself to a blank canvas of a chart. It's just a little difficult because there's some areas you say, is that in Basil's case, is that a peak D? Is that an instant restart as Basil talks about? I encourage you to check it out, folks. It's going to be a great webinar. If you haven't tried out the opening call yet, check it out on the front page of TFNN. You can sign up for either a month, 6 months, a year. All of those come with a 30-day money-back guarantee. So I encourage you, if you're thinking about staying on with Basil, and you should be, he's got a great service out there. He's got a loyal following out there of people that have been with him for years. Think about signing up for the 6 month of the year. You can still cancel within 30 days. You gain access to his opening call newsletter. You gain access to all the archive webinars, and you get a 30-day money-back guarantee. That'll be next Thursday, 90-minute webinar for subscribers to the opening call. I encourage you to check it out. All right, what else we got going on? Jumping around to some of the stocks, taking a look. So the Archegos saga, right? Interesting in many ways. But two of the stocks that I like, Discovery, one of the best, folks. I've been looking at it for my newsletter. We don't have any yet. I do have some personally in a small position. Just had to dabble a little bit when this thing just crashed lower because in the long term, folks, They got a lot good going on at Discovery. They really do. And yeah, we've already traded from a price point of under 20 on October. We were trading at a price point of 27 in December. We're still sitting at 42. You pull up the Analyze tab, we break down the fundamentals of this company, and you're talking about a company right now valued at about $20 billion. But it's remarkable when you think about this company in particular, okay? What they've managed to do, which I'm so impressed by, is that they've built a streaming platform, $5 a month, that includes a plethora of their channels. I think it's TLC, it's Discovery, the Food Network might be in there as well. I'm paraphrasing some of them, okay? Don't quote me on all the channels, but they have a bunch of channels that all have a loyal following. And what they've done is they've created additional content for shows that are huge on their platforms that it's only accessible within their streaming platform. So you have people that already subscribe to cable television who already gain access to their channels on that cable TV subscription, and they've managed to create a system that they're going to get people, and they are getting people, to sign up for their streaming service who already have access to their channels via regular cable. That's quite an achievement. You know, when you talk about a business plan, if somebody comes in and you say, listen, we got a great channel on cable TV, what we're going to do is we're going to get people to sign up for our streaming service, even if they already have access via cable TV. That's what they're doing, folks. Excuse me. So keep it on your radar. If you're thinking about getting into this stock, you can dabble right here. You can't go wrong with a small position. When you were just sitting at 78, you're sitting at 42. You got a $20 billion company, but they're going to be a player in the streaming business for the time being, for the future to come. They really are. And I imagine that this stock over the next couple of years has some appreciation coming to it at 42. Doesn't mean we won't see this thing below $40. I would not step in with a full position right now. But you could take a look at that because, man, quite a haircut. Even from a couple of days ago, we were trading as high as 45, 47, and we closed under 42 yesterday. You look at that, you're talking about almost a 10% hit from where we were just Wednesday. The other one, Viacom, CBS, they have a lot more going on than just streaming. So a little bit more of a gamble when you talk about getting into that company in terms of what they have going on. But again, nonetheless, you're talking about a 60% haircut from where we were at just last month in Viacom, trading down to about 43 right now. Both of those stocks catching a little bit of a bid off the lows. But boy, we haven't found any strength at all yet, which is why I say do not step in with a full position on those equities just yet. All right, what else we got going on? The S&Ps are barely positive. We got the NASDAQ barely negative. We might just see a slow Friday, folks, with these markets basically sitting near all-time highs. We got the S&P bumping up against 4,100. We got the Dow bumping up against that's the NASDAQ. Dow bumping up against 33,500. And the NASDAQ, next stop is all-time highs of 13,900 made about 2 months ago. February 16th, we reached a high this morning of 13,841, backing off a bit, though, from those levels at 13,704 right now. Bitcoin holding steady at about 59,000. Interesting to see that we've chopped around a bit. Basically, since February 22nd, we reached a high of 57,790, so just shy of 58,000. We're within $1,000 of where we were trading at almost a month and a half ago on February 22nd. And let's take a look at gold. Yet again, gold down about $18, but gold catching a bid off of a low right now of $9.50 in the morning. We made a low of $17.30. Gold up about $10 to $17.40 this morning. We'll see if it can get back some of those overnight losses in gold. And we'll take a look at the VIX, as we've talked about the VIX trading at 17.12 this morning. Taking a look at some of the other companies that I've taken a look at in my newsletter. Disney, continuing to consolidate here. You know, you could call it a consolidation basically since the February 8th gap away. We gap above the price point we had on December 31st. I mean, folks, if you're looking to get into Disney right now, and we're in Disney in the newsletter, we've been in Disney since like July, since like $118, quite a run. I see 226 is the next stop, about 224 to 226 is the next stop for Disney. The cool thing about where we're trading at right now in Disney at 187 is this area of support we got going on. And again, I always love to say you don't have to be a brilliant technician to see the areas of support and resistance on the chart. The first area was the 183.40 area. We gap above that area in February. We come back to a low on February 22nd of 181.51. We come back on a low of March 5th to 183.34. We come back on a low on March 25th of 181.01. Great part about it is you could easily set your stop at somewhere about 181. Maybe you set it just under 180 to make sure if it hits that round number, you don't get stopped out. That's not a big stop on $187 stock right now, as Disney looks to have support at about 181, and next stop potentially 225 as movie theaters open back up. I mean, when do we get that first headline of $100 million like box office blowout weekend? It's coming sometime, folks. Stay tuned. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have McDonald's up about McDonald's. We have the S&P's up about 5 points right now. Tech stocks only down by about 36. Taking a look at the action, that's quite a pop we got in the tech stocks. We were down at 9 o'clock in the morning at 13,649. I mean, nothing to shake your head about, but we're now only negative by about 32 points as the NASDAQ 100 looks to be positive. We got S&P's positive, the Dow positive by about 110 points right now. Interesting news out there, McDonald's. So they're going to be closing hundreds of locations in Walmart stores as pandemic changes shopping habits. This is what I talk about all the time. The amount of uncertainty that the changes in our basically daily behaviors over the last year has created in the market is remarkable when you look about the impact, and it's just accelerating everything. So you got McDonald's closing hundreds of locations inside Walmart as the pandemic shakes up consumer shopping and dining patterns. Why is that happening? Probably because nobody's going into Walmart anymore. Not like they used to, at least. They're doing pickup orders. Maybe they just pull the car up, you put it in your trunk. Maybe you get deliveries. Maybe it's just not worth it for Walmart to have that retail space McDonald's to have that retail space in Walmart. Nonetheless, you got them closing up stores. They're going to keep about 150 locations, but that's down from about 1,000 locations that they were at in the peak year of that relationship. For about 3 decades, they've combined in that action. So Walmart, they're looking to replace McDonald's with potentially some more regional brands. Maybe they're going to bring in, they talk about Taco Bell, maybe Domino's Pizza, switching things up. But McDonald's looking like they are not going to be able to benefit from that relationship anymore, closing down some of those stores. Now, disclosure, we got some McDonald's in my newsletter, Rocket Equities and Options. Folks, if you haven't checked it out yet, give it a 30-day free trial on the front page of TFNN.com as well. We're coming into earnings season. I love me some good option trades during earnings season in a big way. McDonald's, quite the resurgence in terms of, we were at about the last month ago, we were sitting at 202, we're sitting at 230. How about gaining almost $30? How about almost 15% from where we were on March 4th? And that's in the dividend company, McDonald's. And guess what? We also got some Walmart in my newsletter as well. Walmart, we were in here prior to their earnings, so we're about break even on Walmart, back to where we were. We're within about $1 of my stop. Always nice when you get that level, but man, you talk about retail sector. How about Lowe's and Home Depot to finish it up? Lowe's up 2.1% today, Home Depot up a full percent. This market is rocking, folks. Stay tuned. We got Basil Chapman coming up next, and don't forget about his webinar next week, folks. Check it out.